Hello, it's Adil bringing you a review of the FTSE 100 for the week ahead, week commencing Monday the 2nd of March 2015. Yes, it's March, folks. How fast the year can go. We're already 2 months into it, and now we're starting the third, so end of the first quarter almost, 1 month left. So it should be very, very interesting as to what happens ahead. Okay. Basically, the summary of which I am going to put forward today, giving my analysis and my understanding thus far. There is one important point to remember: there is divergence, so it's up to Europe whether it basically depends. If Europe continues its march higher, then you are going to see the FTSE following the European indices. Now, the European indices are the Pinocchio, or FTSE could be the Pinocchio. Now, which one is lying? Again, it's mixed signals, okay? Looking at the charts, one has to be bullish. If you look at the US markets and the European markets, they are very bullish at this very juncture. But there are a lot of headwinds ahead and a lot of uncertainty, from monetary policy to geopolitics, which I'll be discussing very shortly, which could very easily and very quickly cause a risk-off scenario. And the bulls could be caught with their pants down, okay, because the market is very, very bullish at this very juncture, okay. And obviously a lot of them individuals are stuck or trapped, should I say. Long squeeze is certainly on the cards as opposed to a short squeeze, okay. Right, let's try and work this out now. Okay, so fundamentals. Let's start with fundamentals in terms of the FTSE. We had Mr. Shafiq, the BOE member, Mr. Shafiq, give a testimony this week, and he some commentary basically this week, and he was very hawkish, and he stated that the next move for the UK would be a raise in interest rates. So that was hawkish monetary policy. Therefore, one presume from there that that's very bearish for equities, and that probably more than likely explains why the FTSE has been lagging its US and European counterparts. Okay, its colleagues. Now, the other variable as well over the weekend, we've had to decipher two. That's one of the reasons why I haven't done a video yet. Usually I send a video out on a Saturday. I haven't done a video is because we had the Chinese data dump on Sunday. Obviously it happened late in the morning today, and overall it was negative, okay. But what caught a lot of individuals off guard really was the Chinese rate cut on the Saturday. That caught a lot of individuals by surprise prior to the data dump, which obviously is convenient given the fact that they wanted to neutralize a negative blow from that, given obviously they already have the data in advance. So the rate cut was done prior to the data dump, so that obviously already told you that data would be weak, which obviously did come in below 50 on the PMI, Chinese data. So from my perspective, that's negative. Now, how do we interpret that? Now, let's have a look at the Chinese index. Let's bring this up for you. Bear with me. There we go, Shanghai. Okay, the Shanghai is at double top, triple top resistance on your daily chart. Okay, and how do we interpret that? So, given the fact that we do have an unfilled gap below, by the way, as well, so that's very important. So there's an unfilled gap below here, just below the 430 level. This is an ETF, by the way, that tracks the indices or index itself. So they had a rate cut. If everything was so bullish and everything was so hunky-dory, then they wouldn't cut rates. Now, from my perspective, they can afford to do so because obviously deflationary concerns are global. So every central bank, we've had Turkey and Israel obviously cut rates this week, and it's a race to the bottom. Everybody wants to devalue and debase their currency. So the Chinese are obviously losing out, and they don't want to import that deflation that's been exported from all over the globe. Obviously, it's a zero-sum game. So if one individual country is suffering from deflation, they obviously cut rates, have a bearish, or should I say, or a dovish monetary policy that exports that deflation to another country or to another economy, such as obviously Japan has been exporting deflation now with its QE program to the world, and that's one of the reasons why the Europeans suffered, and they obviously were patient to the point where they had no other choice but to do their QE program. And obviously there are details coming out. ECB may begin QE purchases on the 9th of March, according to Forex Live. Okay, so they've been forced to do it. Now the Chinese are obviously being forced to do that, and the Chinese, to a certain extent, it's forced their hand, because there was a lot of disagreement with regard to the current bank chief in China I'm not going to go into much detail, but there was a disagreement there, because they did state that they weren't going to cut rates, and that was the senior chap. And there are rumours that this new individual that's going to be coming through is much more dovish. So it's interesting, okay? It's interesting. Does a rate cut mean panic and fears with regards to China, or is that bullish, or is that going to be interpreted as being bullish? So again, that's going to be debated, and we'll have to see exactly how that's interpreted with regards to the Asian markets pushing higher or pushing lower. If I see the Aussie and the Kiwi gapping lower, okay, obviously given the fact that they focus on the rate cut being a negative, and given the fact that the economic data came in slightly worse than expected, or has come into the negative, then that is a risk-off scenario. Okay, if I see the oil price moving lower, if I see copper moving lower, if I can see other Asian markets moving lower, etc., then that I interpret it as, or I understand, and that Asian traders or global traders worldwide have interpreted that as being bearish. Okay, so that's basically how I understand it from that perspective. If we hold this resistance level on the Shanghai index, which is very important, and we move lower, then that should, all in all, answer your own question. As you can see, a 20 MA starting to tilt sideways to potentially lower. We have an unfilled gap below. US is starting to raise rates. Talk of obviously very hawkish monetary policy there, given the fact that even though the economic data did come out weaker, slightly weaker than expected, the real wages are starting to rise, and that's the benchmark for raising rates in America right now. So again, there is a point where individuals want to be ahead of the curve when inflation does start to rear its head. So it's interesting how China is now starting to cut rates, which again has contrary to what it's been saying. So it's very interesting. Okay, that's all I can say. Very, very interesting from that perspective. Okay, so generally, if you have deflation, then it's not exactly positive for an economy, although a rate cut can help you to a certain extent. But one would have to ask themselves, okay, given the fact that Chinese index of Shanghai is up now at triple top resistance, global markets have rallied to such an extent, do we really factor in any more bullish news from a Chinese rate cut? Even though the economic data came out weak from China on the weekend. Okay, so that's a fundamental variable that we have to take into account. The other fundamental variable that we have to take into account, obviously, is the FOMC. Miss Yellen, from my perspective anyway, has been neutral stroke hawkish, and all the Fed members that have come out, or whether they're on the board or not on the board, they all speak on behalf of the board. Okay, from my perspective, and they have an educated guess, and an experienced forecast should be respected regardless if they're on the board or not, and they've all been hawkish. So they are obviously prepping the markets and psychologically allowing the markets to accept that there is going to be a rate increase. Now, given the fact that the Fed is hawkish, what's going to be the negative impact on the markets? Obviously, the way in which we observe that and the way in which we measure that is by looking at emerging markets, because a rate increase will hit them the hardest. Okay, and given the fact that emerging markets are into resistance and are on the way lower, does that mean that's positive for equities? No, it's not. It's negative for equities. That's why tapering was negative for equities. That's why a rate increase is going to be negative for equities, because of the higher costs of borrowing. Okay, and obviously emerging markets get hit first with regards to that. And that's obviously negative for equities in terms of exports around the globe. Okay, so emerging markets are very important when it comes to exports and sustaining the first world economies. Okay, so again, you can see in the daily chart on the emerging markets, you have a topping tail and basically holding resistance. So that's a negative sign. Okay, that's a negative sign, a very, very negative sign. Also, with regards to the US dollar, this is going to be very interesting how this dollar game plays out. We have this sideways pattern breaking out the bullish channel, given the fact that we've had hawkish commentary. From my perspective, there's an unfilled gap on the 60-minute chart that needs to close above, and that will more than likely be closed. Now, the other factor as well we need to take into consideration is the geopolitical events over the weekend. We've had this individual in Russia obviously be shot, and whether you call it assassination, whether you call it revenge attack, I don't know what to call it, but basically that is obviously heating up. There's obviously war by proxy here now with regards to Russia and the US. I call it the warm war as opposed to the cold war now, and this is going to be very interesting, as obviously we've got war in Syria via proxy, you have war in Ukraine via proxy. So again, Greece is a proxy war as well, because they're obviously punishing the Russians because they are heavily heavily invested in Cyprus and Greece. So this is going to be very, very interesting. Okay, so now that's a geopolitical event that certainly needs to be taken into consideration. Also, we've had Mr. the Pyongyang, his name is the North Korean leader, basically alerting his citizens of a war with the US. So again, that's a potentially negative sign as well. Okay, situation with regards to ISIS is ongoing. So again, geopolitics, obviously from that perspective, again, a rise in the dollar can happen very, very quickly, very sharply. Okay. The other factor as well is Greece. Now there have been headlines over the weekend with regards to Mr. Varoufakis stating that he was vague intentionally when it came to negotiation, because that's the only way he could pass the authorize the bill for a bailout. So again, will the Germans trust that? Again, so Greece remains basically is a monkey wrench. That's basically how I see it. So it's very interesting as to what's going to happen with regards to Greece. I mean, that situation could certainly spiral out of control very quickly, especially with regards to the German opposition growing against a bailout and against getting authorization. So again, it's dependent. It's not concrete or set. They only get the money if they adhere to the rules and regulations within a 4-month period, and they're already showing that they're not going to be doing that with comments like that. Okay, so again, Greece is certainly an uncertainty. It certainly hasn't been resolved. A lot of people think it has. It hasn't. It's on a probationary period, and that could certainly escalate out of control very quickly as well. Okay. Now, obviously, US data we can have a look at as well. Again, that's a negative interpretation, because US markets interpreted that as being negative, and they were under pressure on a Friday. So the GDP data didn't come out as high as expected. So again, that's a concern. Also, with regards to the UK business investment, again, another cause for concern. Just on the weekend, I'm looking at your news articles, etc., with regards to the FTSE 100. At present, I'm looking under the economy section, and basically, consumption underpins UK growth, but a fall in business investment will raise recovery phase. So again, it's a cause for concern. So when you have articles like that, it's potentially, well, not potentially, it is considered and understood to be negative. With regards to the US, obviously the GDP data again didn't come out as high as everybody expected. So again, that's something that we certainly need to be taken into consideration as well. So it's the reaction in which how the markets interpret that news flow. I mean, if you look at the S&P 500. This is a classical interpretation or understanding. If you look at the 60-minute chart on the S&P, you can see a H&S formation. So that's not exactly in a break of the rising contracting wedge, and that's not exactly, and obviously increased volume as well. So increased volume on selling. Why? Because you had a lot of hawkish commentary come out of the Fed members with regards to its balance sheet and so on and so forth. So any commentary like that is considered negative for equities. Okay. So there are a lot of uncertainties going into this week, and the market has rallied to quite an extent and has priced in perfection. And the main, obviously, catalyst has been the European markets. Okay, and obviously the sell-off, or the sharp sell-off in the euro, which obviously is being interpreted as being bullish in terms of exports going forward. If you bring up the chart, the euro USD, and you can see we've sold off quite substantially. I mean, if you go to a 60-minute chart, and you can see that the market sold off quite substantially. So again, it's very interesting going forward as to how the markets interpret the euro. A fall in euro, remember, is considered a lack of confidence in Europe, a lack of confidence in the Greece situation, etc., etc. People, well-respected analysts like Kathy Lien, Neil Gilbert, expected a euro rally because Greece was behind us. Obviously, that's not the case. So again, this is all considered to be negative. So given the fact that there has been a strong correlation with the S&P 500 and the euro, as you can see, euro fell, S&P 500 fell. Okay, so again, it's very interesting. There seems to be a positive relationship between the fall of euro and Europe, but the FTSE itself has been obviously reliant upon the price of oil, and as you can see on Friday also, the S&P 500 is reliant on the movement and the price of oil, and as you can see here, we obviously have been testing the lows. So again, it's not exactly a bullish sign with regards to the FTSE itself. Okay, it's not a bullish sign overall. Okay, so now that I've covered the fundamentals, the main, namely weaker data overall, obviously a rate hike, hike in rates, and also with regards to a hawkish monetary policy from the BOE and the Fed. Okay. Given the fact that you've got geopolitical fears now with regards to this Russian incident over the weekend, weaker Chinese data and a surprise rate cut again may well spook markets, given the fact that there's fear and panic in China, and they have inconsistency with regards to their monetary policy, which should all be a cause for concern. So all those factors added together, my interpretation would be negative for the FTSE 100. Now let's see if the charts agree. Okay, so we start with the FTSE 100. If I go to the daily chart of the FTSE 100, just bring up a daily chart, bear with me. If I go to my Pro Real Time, I only rely on Pro Real Time for daily charts, also 60-minute charts, but a 10-minute, given the fact that the gap levels are not shown on the FTSE, that's why I have to bring up the other chart. Okay, so just bear with me 1 second. Okay, see if I can just locate the FTSE. Okay, FTSE All Share. Okay, so FTSE All Share is into resistance. Previous support equals resistance, so that's something to certainly take into consideration. The FTSE, bear with me. I've got two charts open, it's very confusing, so bear with me. Excuse me. Not sure where my FTSE chart has gone. Okay, 1 second, I'll have to add it again. There we go. Okay. Let's get this added now. Okay. Excuse me. Okay, so FTSE 100, as you can see, a rising contracting wedge. We put in a doji candle on Friday, so I would interpret that as being bearish. Again, like I said, the concerns with regards to US GDP, given the fact that we had concern, given the fact that the Nikkei and the China were more or less flat overnight, given the fact that we had a weaker interpretation of the US GDP, given the fact that we've had hawkish commentary as well, and given the fact that the BOE was hawkish as well, given the fact that the UK data wasn't exactly strong in terms of, yes, it was lagging strong, i.e. previous consumption is strong, but business investment is the future. If you have no investment, you have no growth, and that generally signals the growth rate going forward. So that was interpreted as being bearish. So first of all, you have a rising contracting wedge pattern, which isn't a body sign. Okay, that's a very bearish signal from my perspective, and I've seen too many charts with rising contracting wedges breaking down because it indicates exhaustion from a bull's perspective. Okay. FTSE 250, yes, certainly powering ahead on the weekly chart. One can't caution that, one can't even question that. But again, as I go into the smaller time frames, I'll explain exactly what's happening there. Okay, FTSE 350. Bring up the 350 chart. Again, certainly bullish, although it has put in a doji candle, so again, that certainly needs to be taken into consideration. Okay, now let's go to the smaller time frames. Okay, so FTSE chart on a 60 minute. Okay, 60 minute, again, you have this rising contracting wedge pattern. It certainly seems to be making some type of base here. If I just draw a horizontal resistance line here, and obviously here, so again we're in that 6960 zone. Again, it's struggling. If obviously the Chinese rate cut and news propels a FTSE above 6960, then I'm happy to switch my bias and accept that the bulls have won on this occasion and the bears have lost. My stop loss will be hit. Obviously I'll throw in the towel, but from my perspective, given my analysis and a lot of other variables, I am expecting this FTSE to break down and certainly test this 200 MA, if not lower. Okay, that's certainly my target. Okay, so 60-minute chart certainly is showing indicating signs of resistance. 10-minute chart, yes, we did break through on this late spike, which was quite strange. I don't quite understand what was happening there with regards to the FTSE spiking higher, especially given the Greece news and the additional news of a third bailout that may well be much higher than expected, coming in at 30 billion. Again, that was all negative news flow. So very surprised as to why the FTSE spiked there. One could interpret that as late short covering, no idea. Okay, especially going into a weekend with Chinese data over the weekend as well, and the uncertainty regarding Greece. Okay, so a 10-minute chart certainly is indicating resistance at around the 6970 region. We do have a probability, and this is a trade that I will be playing early Monday, and this is what my interpretation will be. Your left shoulder is in. You've put in the head on the 10-minute chart. You may well get a pop anywhere around the 6950 level. I'll be looking to short. Your head is 6970. Your neckline is 6940. So you're looking for a 30-point drop around the 69. Easy if you're looking at 6940, 6910. Potential support 6920, and obviously 6910 is below here. So again, looking for a potential breakdown from that perspective. Okay, on a 10-minute chart with regards to the FTSE, 6960 and 6970 are certainly resistance levels. If we push above 6960, 6970, then I'll throw in the towel and accept that the bulls have certainly won and pushed higher here. And one of the most important lessons or variables for the FTSE to propel higher will be Asian markets higher, and obviously oil higher as well. Okay, that's going to be very, very important with regards to the FTSE 100. Okay, so the FTSE 250, again, like I said, I would show you a pattern that would indicate weakness, and as you can see here, we're in this bullish channel. On the 60-minute chart, we seem to have put in a topping tail, double top, potential double top, and obviously looking for this bullish channel to break on the 60-minute chart. The 10-minute chart, you can clearly see you've put in an intraday double top. If that double top holds in the FTSE 250, then expect the FTSE 100 to break down, and certainly for the FTSE 250 to break down too, and obviously close the gap below. Okay, so that's going to be very interesting as well as to how the FTSE interprets the US price action, because we did have weakness going into the weekend. Okay, so how does the FTSE discount that and factor that in? Okay. Right, the other factor I'm going to show you, other variable that's I think is very, very important, is the FTSE volatility index. The volatility index generally is into support. Whenever that's into support, that's obviously a negative inverse correlation with regards to the FTSE 100. So basically, if the volatility index starts to move higher, given the fact that it's a measure or gauge of fear, okay, then the FTSE 100 will start to drop. So that's certainly into key support. Has held its double bottom support here, as you can see. Obviously you've got horizontal support down here as well, but we are into a key support zone, looking for a potential bounce and a sell-off in the FTSE 100, given the fact that the FTSE 100 on a daily chart has a rising contracting wedge pattern. Okay, so again, this all adds to the argument for the FTSE to move lower. Okay, now let's have a look at these sectors. This is quite important. This is something that I've been teaching the subscribers over the weekend, to observe these sectors. This is something that I do. I can't include these in the videos because on a daily basis, because the videos just get too long. Okay, but on the weekend I can certainly include them. So given the fact that you've had Lloyd's TSB weak earnings and HSBC obviously scandal on weak earnings, that's not exactly going to help sentiment. Okay, so from my perspective, the banking sector has this bear flag scenario, okay, and it has an unfilled gap below that needs to close. Okay, so let me just get rid of this gap because that's closed. The next gap we are looking below, and it certainly is weak from my perspective. So that indicates weakness for the FTSE 100. Okay, let's have a look at the mining stocks. The mining stocks, as you can see on daily chart, we put in a topping tail, so again indicating weakness, given the fact that, like I said, the Fed remains hawkish or sounding hawkish. And from my perspective, you certainly seem to have this H&S formation playing out here. So you've got left shoulder here, head looking for a right shoulder, which obviously is in, and now we're looking to potentially move lower, and you have this unfilled gap on the 60-minute chart that needs to close. So mining sector certainly is looking at indicating exhaustion. You also have an unfilled gap below here as well, so watch out for that unfilled gap. Okay, so two gaps that certainly need to be filled. Okay, so miners certainly weak, so adds to the argument for the FTSE 100 to go down. Daily chart, oil and gas sector certainly is indicating exhaustion. We had this H&S formation. It still is an H&S formation. Still, it certainly is into play or in play, given the fact that oil prices fail to really, cement any type of rally really, and this certainly seems to be open to weakness, and there is an unfilled gap below that certainly needs to close. The whole concept is that we haven't put in a higher high. We certainly have stalled here, and the market certainly seems to, from my perspective, certainly seems bearish. So. And again, if you do push higher, then you have this resistance zone up here. But from my perspective, certainly weak in terms of oil, so not exactly indicating bullishness. Now, retail sector is very, very interesting here, folks. As you can see, if you look at your daily chart, excuse me, certainly seems to have had quite a stellar run. 60-minute chart has put in a bearish engulfing candle, so that's not exactly a bullish sign, especially with the UK data dump indicating weakness. You have this bearish engulfing candle, you have consolidation within it, and you are looking for a potential bear flag scenario for a gap fill below. Okay. Again, the 10-minute chart on retail, you can certainly see double top resistance. Okay, so that's indicating resistance on retail. Therefore, FTSE 100 will be under resistance. Now, the mobile and telecoms, given the fact that you've Vodafone has warned with regards to its profits, etc., it certainly isn't looking good on a daily chart. If you look at a 60-minute chart, you can see that it's breaking down. It really has broken down, and there is an unfilled gap below here that certainly needs to close with regards to the mobile and telecoms, and that's not exactly a good sign. Okay, and you have an unfilled gap obviously above there. You are looking for potential new lows in telecoms, and that certainly isn't a bullish chart that will encourage you to obviously buy the FTSE 100 from my perspective. Okay, just bear in mind, folks, you are looking at a FTSE 100 that has a rising contracting wedge pattern that's looking for an excuse to break down, and these sectors are all giving you excuses for that to break down. Okay, tobacco is a key. On the daily chart, you can clearly see you've got double top resistance. Okay, so will that take that out? Very unlikely. Okay, double top is, and you drop, as they always say. Okay, 60-minute chart again indicating resistance. Okay, you have this rising contracting wedge type pattern again, very similar type of pattern here and here. Okay, so looking for a potential move lower ideally. Okay, ideally you had a bearish engulfing candle towards a close, again indicating weakness on the tobacco sector. Life daily chart bearish, well, not bearish engulfing, but certainly a bearish candle, and 60-minute you can see there bearish continuation pattern. So again, 10-minute chart will indicate double top, triple top, topping tail. Okay, so resistance again for the life insurance. Okay, pharmaceuticals again indicating resistance on daily chart. 60-minute, as you can see, resistance again. How many times are we going to hit that certain level? Okay, and looking for exhaustion. 10-minute, we've put in a lower high, looking for a lower low. Okay, so again, all of these sectors one by one. Drinks again, bearish, potential bearish candle. 60-minute chart, you can see bearish continuation pattern. If you look at the hotel and travel leisure, you're looking at a bearish candle. 60-minute chart, you can see here we are looking for exhaustion. Okay, so if you look at the pattern that's being played out here, bear with me. Okay, you have this here, and you have this here. Okay, so you're looking for a potential breakdown. Okay, so in this bullish channel, so again, very, very interesting price action. Again, looking for a potential lower high, then obviously move lower, and this really signifies to me a potential H&S formation on the on this chart. So you got left shoulder here, bounce, looking for a right shoulder, then obviously down we go. So again, negative scenario. So everything is indicating to me as being bearish from my perspective. Okay, and like I said, you're looking for this right shoulder on the FTSE in the 10-minute chart. Keep your focus on that. FTSE 250 confirms that. If you look at your FTSE 250, you have an intraday double top. Again, that's resistance. So given the fact that oil, which is obviously the lifeblood of the actual FTSE 100, has failed to really catch a bid. Okay, so again, that's a warning sign. Well, how this interprets Chinese data is yet to be seen, and certainly the path opens up for a potential new low and further lows from that perspective. So certainly not looking good. Certainly not looking good from a technical or a fundamental perspective. So again, it will all depend on how Asia reacts to the Chinese data flow that's come out on Sunday with regards to its reading. If you bring up the latest economic data on China, you can look at on the Economist, etc. It's not a pretty reading. Okay, it's not an impressive reading. So again, that's going to be interesting. So hawkish central banks, BOE, Fed, given the Russian situation over the weekend with regards to an individual being assassinated who was a Putin critic or in the opposition movement, how is that going to be interpreted? Could that escalate the situation in Ukraine, etc., etc.? So there are a lot of uncertainties from my perspective, probably others that I haven't even covered. Like I said, the Greek bailout is going to be larger than expected, and that could certainly spiral out of control as well. So interesting times. I've given you an insight there with regards to fundamentals and technicals. like I said, watch out for that rising contracting wedge pattern. If we make a new high on FTSE, then we have to respect that. If not, then the bears are certainly in firm control. Okay, risk on, risk off, wax on, wax off. Goodbye now.